When making investment decisions, it is always important to carefully examine both the benefits and the drawbacks of any given company. Understanding the full picture gives investors the ability to weigh potential risks against possible rewards, and this balanced approach often leads to smarter financial outcomes over time. In past discussions, we have looked at some of the reasons to be optimistic about BigBear. However, in this video, we need to shift gears and focus on the criticisms that analysts and market observers have shared about the company. At the same time, we will compare BigBear with Palantir Technologies, which is widely considered one of the most successful artificial intelligence companies in the stock market right now. It is important to clarify that BigBear and Palantir are not direct competitors. In fact, the two companies often work together in certain government-related areas. Still, Palantir serves as a very useful reference point to measure what a strong artificial intelligence stock should look like when it comes to growth, performance, and investor confidence. At this moment, Palantir Technologies has been the centerpiece of the artificial intelligence story in the broader stock market. In the year 2024, Palantir was the single best performing stock in the Standard & Poor's 500 index, which is no small feat considering how many companies are included in that benchmark. The company has set high expectations as it attempts to continue this winning streak into the current year. Palantir has achieved this reputation by riding the wave of artificial intelligence adoption, creating advanced solutions that not only serve its government clients but also reach a growing number of commercial businesses. Its unique positioning in both government and commercial markets has made it a model for how artificial intelligence companies can thrive. On the other hand, BigBear operates on a much smaller scale. The company trades on the New York Stock Exchange under the ticker symbol BBAI. While BigBear's stock is up by 20% since the beginning of the year, its momentum was disrupted by disappointing results in its Q2 earnings report. After that announcement, the stock dropped by 28% in the span of a single month. This sharp decline raised questions about whether BigBear's business model is strong enough to weather market pressures and whether the current dip presents a buying opportunity for investors. BigBear is based in a Virginia suburb just outside Washington, D.C., which positions it close to the center of government activity. This location is strategic, given that the company focuses heavily on federal government work. The company provides mission-ready artificial intelligence tools and services designed to help defense and intelligence agencies make faster and more accurate decisions. These offerings are specifically crafted for environments where data-driven decision-making can improve both safety and efficiency. One of BigBear's most notable accomplishments is securing a $165 million agreement with the United States Army. This deal is focused on modernizing Army systems by integrating artificial intelligence into existing platforms. The purpose of this integration is to help commanders make informed decisions for training and mobilization of soldiers. Beyond this major agreement, BigBear is also involved in a number of smaller but meaningful projects. For example, the company has teamed up with Hardy Dynamics to bring artificial intelligence and machine learning into various aspects of military operations. Another key project is its Enhanced Passenger Processing Program, which uses biometric technology to improve the flow of travelers at airports. This initiative has already been rolled out at major international airports located in Chicago, Los Angeles, New York, Denver, Dallas, and Charlotte, North Carolina. In addition to domestic programs, BigBear is also positioning itself to benefit from broader policy priorities. The Trump administration has emphasized the use of biometric systems for border control and the application of artificial intelligence in military decision-making. BigBear is aiming to capitalize on these priorities by targeting large funding opportunities. Management has identified a $70 billion potential tied to United States Customs and Border Protection. They also see a $673 million potential opportunity linked to government funds that have been allocated specifically for biometric border controls. On top of these domestic prospects, the company is also expanding its international footprint. BigBear has entered into new agreements in the United Arab Emirates, working with EasyLease PJSC and Vigilix Technology Investment to implement artificial intelligence solutions across multiple industries. At first glance, all of these initiatives may seem like strong tailwinds for BigBear's growth story. However, the company's most recent earnings report revealed several red flags. While Palantir made headlines by surpassing $1 billion in quarterly revenue for the very first time, BigBear's performance in the same period was disappointing. The company posted revenue of $32.5 million, which represented an 18% decline on a year-over-year basis. The company attributed this drop primarily to lower volumes in certain Army programs. What made matters worse was the company's net loss. BigBear reported a net loss of $228.6 million in the second quarter. This was a dramatic increase compared to a net loss of just $14.4 million in the second quarter of 2024. Management explained that this steep loss was largely caused by non-cash adjustments totaling $135.8 million, which were related to 2029 warrants. Additionally, there was a non-cash goodwill impairment charge of $70.6 million. While these are non-cash items, they still paint a concerning picture for investors when combined with declining sales. Adding to these worries, BigBear also made the decision to withdraw its adjusted earnings before interest, taxes, depreciation, and amortization outlook. The company cited uncertainty regarding Army contracts as well as anticipated spending increases tied to growth initiatives during the second half of the year. For investors, this withdrawal is a major red flag. Guidance helps shareholders understand what to expect in terms of financial performance, and when a company pulls back from providing that guidance, it usually signals that visibility into future performance is weak. In contrast, Palantir is thriving, as it reported revenue growth of 48% during the second quarter. The stark difference between Palantir's explosive growth and BigBear's lack of momentum makes the situation even more concerning. Despite these challenges, BigBear does appear to have one advantage compared to Palantir, and that is valuation. Palantir's price-to-sales ratio is currently an eye-popping 117. In comparison, BigBear's price-to-sales ratio is slightly above 9. For some investors, this makes BigBear look like a more affordable entry point into the artificial intelligence space. Critics of Palantir often argue that its valuation is excessively high and that it leaves little room for error. However, the reality is that Palantir's rapid growth continues to justify that valuation for many investors. For those looking to diversify, there is a case to be made for considering other artificial intelligence companies that work with government contracts. However, skepticism about BigBear remains high. The main reason is that it has not proven that it can consistently secure enough deals to ensure sustainable long-term growth. For perspective, Palantir closed 157 contracts worth more than $1 million each in the second quarter alone. By comparison, BigBear is heavily reliant on its single large army agreement. This dependence creates a significant risk, because if funding from that contract were to decline or be cancelled, the company would not have enough alternative revenue streams to make up the difference. Overall, BigBear is a smaller, government-focused artificial intelligence company that has secured contracts such as a $165 million deal with the United States Army and biometric projects at major airports, while also pursuing opportunities tied to border control funding and international work in the United Arab Emirates. However, the company is struggling financially, as its second quarter revenue fell to $32.5 million, down 18% year over year, and it reported a net loss of $228.6 million compared to a $14.4 million loss in the same quarter of 2024. Management also withdrew its adjusted earnings before interest, taxes, depreciation, and amortization outlook, citing uncertainty in Army programs. In contrast, Palantir Technologies, which serves as a benchmark for artificial intelligence stocks, grew revenue by 48% and secured 157 contracts valued at over $1 million each in the same quarter. While BigBear offers a lower valuation with a price-to-sales ratio of just above 9 compared to Palantir's 117, its heavy reliance on a single Army contract and a lack of consistent growth makes it a much riskier option for investors. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.